Date 12/1/2013. December 1st is upon us. It's the last calendar month of the market. And here we're just going to take a look at Priceline on a monthly level. And when we go back to 1999, Priceline was extremely overbought. And one thing about Priceline is we have gone parabolically up. And I'm going to keep the trend lines on the chart because we go back that far to find support levels. And one of the things that I'm going to show is this parabolic move straight up. 1, 2, 3, 4. 1, 2, 3. Look at the breakout of the calendar 2013. Now we had call contracts on Priceline and we bought it because it's a great company. However, once these markets pull back, and Priceline is overbought on the monthly level. So what we will be doing on Priceline is taking a look at the bear side, the put side, and we're going to take a look at some of the calls as well. However, we're going to focus on the weeklies and the calendar monthlies and the January monthly contracts and their put contracts below the market. So as we get over here, we're extremely overbought in an overbought territory. We made an all-time high of $11.98, right below $1,200 a share. So Priceline's overbought. Now when we take a look at the weekly, we got trend lines that go back over here in 1999 when Priceline made all-time highs. Of course, the world was a little bit different, but nonetheless, these two trend lines that I have drawn come from that 1999 area. Okay, so we can take a look at the weekly breakouts to these all-time highs of $11.98. We closed on a weekly level and the daily level at $11.92, and that we are in a extreme overbought area where Priceline likes to have corrections. The last one that we had was over here. This high on Priceline was 1074. We went from 1074 on the weekly high and we said we were extremely overbought and we were going to come down. We hit the low of 972 on a weekly level. There was a $100 pullback in here, 100 points. Okay, this was the best pullback of the year. It was 100 points. And when we got down here at 972, we were trading Priceline, and that was a buying opportunity for the institutions. What I am going to be very clear about moving forward, and even in this month, is that we're going to have another correction in Priceline. It's a pullback. And we pull back 100 points right here. And we told everyone the following. Clearly, if you go to stockmarketfunding.com, you can put Priceline, put it in the search bar, PCLN. You're going to find out past performances, meaning that going back in certain times when we call the highs and the corrections on Priceline. You can also join us for a free 5-day trial. Click on the free trial button. Get started today. Read the content. Get started today. You want to open an account and we will fund your trading account. You want to get involved in the next bull run and bear raids, bull and bear markets. Simply watch the videos, open an account, get started today, and do the right thing. If you want to get involved in markets, most people have been on the sidelines, but it's time for you to think about it. You're more than welcome to learn everything that we have to offer, and we will fund your trading account and we will give you buying power. And we have one of the biggest prop trading groups on this earth. Believe me, we have over 1,000 people. What I am saying is, if you want to take advantage of it, we'll give you buying power. Just read the content, take the time to go through it. What we're going to talk about on Priceline is we have traded this since it was public back in 1999. So we've had a parabolic move up in a 4-week. The earnings They reported their quarterly results. They were great results. We have that live video where the stock dropped over 111 points. Not only did we have a 100-point correction here, but I will tell you that there is an after hours video on our website where this stock dropped down to 946. And when you watch that video, and I would watch that video if I were you, because price line volatility is that we hit once we recovered at 993 on 10/13, October 13th. The low on price line was 993. What I will tell you is that we had a 100-point correction. Having the put options on Priceline was the right thing to do. And what we are seeing clearly now, that having the put options here is the right thing to do. And that it will be in a time series of price movement, meaning that nothing always happens at one time, but over time we're going to have another big correction. And we've had a 100-point drop here. During the earnings, we had a 100-point drop. That live video is on our website. Go back and take a look at it. That's when they reported their quarterly results. And that right now, Priceline is in a bubble. And on the weekly, it's extremely overbought. So the thing that we will do is on the monthly chart that I showed right here is what type of pullback. This is November. This is 11/1. And that the bottom was 10,020.69. And from that bottom of November, we've gone to the high of 1198.75. The way to do Priceline is there's a lot of people that don't have enough buying power. Institutions do. And we're going to take a look at the 1195, the 1190s, 1185s. We got the 1200 put here for 1221. We've got a 1200 put here for the weekly, 5-day weekly pattern of the 1200, and why you want to learn how to get on the other side of these pullbacks. And once they do pull back, you get net long. What I am saying on the monthly level is that we're due for a good pullback, and the put side is going to pay on Priceline. We're going to be examining the $1,200 put weekly. It starts in December 6th weekly, and that up here, we were $86 on the high side. During the earnings, they gapped the put down and then put in the high of $32. Right now, we're going to take a look at the low of the $1,200 put was $14.70 on what date? 11/29. That was the last calendar date that we traded a half a day, and we hit $14.70 on the low. But this put option closed at what? $18. So we're looking at how to trade Priceline on the short side using the put options. Here we're going to take a look at the $1,200 put option on Priceline. That is a monthly expiration, expires on 12/21. It's a monthly option. Over here, you can take a look at the high was $65. It was over here at the highs of $146. This is the put side of the market, and this was not very long ago. That was 10/22. But listen, there wasn't a lot of volume. They were illiquid. So we're going to start with the high here of $65 a contract. And right now, the low on 11/29 was $28.04. And that Priceline is extremely overbought. And we're going to be taking a look at these contracts on a monthly level, starting with the 1200. Another one we're going to look at is the 1195 put, which, if you take a look here, and this is a daily put chart is that the high over here on 1125 was $50 a contract. Now we're hitting an all-time low of 25.85. This is the side of the market that we trade because this side is deflated and price line is overbought on the weekly chart. Once again, here is the weekly chart and it's overbought. Now, if we take a look at some of the call contracts on Priceline, we're just going to show the mathematical imbalances. Math never lies as to what side of the market to get on. So when I take a look at Priceline call contracts on December calendar month, if I take a look at the contracts, here they are. We're going to go and take a look at the 1190 call. And that the 1190 call has gone from, and this is where a lot of money was made for the bull. They were a low of $19.80. We own these calls, and what we're going to say is that these calls are totally inflated up here, and that the price level right now, the high of this contract is $100. Yeah, and that's the 1090 put, which is, remember that Priceline closed or hit a high of 1198, and that once we had gotten here to $66 a contract, we were inflated, and we dropped down to the low of $44 a contract on what calendar date? 11/19. And then they gapped these calls up. The high was $78. So this side of the market has already had its great gains. And that this is the 1090 call. One of the things that we're going to show is where that other contract is. And we are going to show those to the MMTs is the $1,200 call. Priceline $1,200 call. Look over here. The low was $2.90. And we got inflated over here, and they came down to the lows here of $2.55. Priceline did a good earnings. They ran up. We had a pullback. The low here on the call side was $5.40, but now that $1,200 call on Priceline is inflated up here. And that every time they get inflated, the bull loses, is exuberant. They come down, and we're saying that these calls over here are inflated and they're going to come down. So when you take a look at them carefully, here's the $1,200 put. Once again, the $1,200 put on the monthly calendar spread right here is that these are $28 on the low, and they close at $30.20. This is the side of the market that's going to make money. And that, Priceline have been in a great bull run, but there are times that we have to trade it. When I go and take a look at Priceline in January, and I'm going to pull up a put contract that is tradable for premium. And here is where it is. It's going to be the 1170 put, which is well below the market. And the lows right now, remember, this is a January monthly 1170 put. There isn't a lot of these contracts traded, but we are hitting the lows. Now remember, we're going to be looking at how to get in at the wholesale price, and that price line is going to have a pullback. Here, when we look at the 1200, the high over here was $118 for this put option. And this is a calendar monthly. But now, when we look at it, the low was $42 a contract. And that this side of the market is going to be the side of the market that pays. And that, they're $47, $42 a contract. Even if you had one contract, when Priceline corrects and this moves back up to $64, you could make a lot of money on the put side of the contracts. So we are going to do a series of these contracts, one price line, and we're going to start with looking at trading below the market, the 1170 put, which expires on the monthly December. Today is December 1, and these will expire on 12/21. And that this contract here is cheap, and the premium, it's a premium trade, because you can see how liquid they were up here. There was only two contracts traded at $140 right here. So listen, as Priceline rallied up, the put side of the market that went straight down. So here is the 11/20 date that the high here was $60.80. This trade here can be done on an intraday level. They're down here now. Remember that this is out of the money. It's out of the money. It's 1170 put. And that we can trade this for an intraday trade and or between 1, 3, or 5 days. And that is all based on Priceline being overbought. And here is the monthly chart on Priceline. So we are up here at the highs, and that the monthly low on Priceline for September monthly low was 937. The 10/1 October monthly low was at 972, and that now that we are going into all-time highs of 1198 on the all-time highs. So Priceline can pull back $30 in one day, and that we had plenty of pullbacks on Priceline, and we're going to be setting our alarms, and we're going to be taking a look at how we can trade these intraday. We're going to take a look at the 1180 put. Look at it here. The high just right here was $68. The low over here was $19. Now listen, they're a tradable trade. Whether it's intraday, how you get the wholesale price, but that these are deflated and that we're going to be trading them. And that's the 1180 put. And that's a 12/21 expiration. When we look at the weekly that's coming upon us, why would these be traded intraday for a profit? Well, here, they expire in 1 week, but they were $86 up here. Now we are down here in a deflated area at $14.70, and we're going to take advantage of the 5-day trading zone that we can buy wholesale and sell back retail. This is a mathematical equation, and that, look at the call. Let's look at the call. Here's the $1,200 weekly call. Look at that. Look at how low it was. It was over here at $1.61. Now they hit a high, and it's at the strike price of the 1200, but it's inflated. You can see this clearly. It made a high of 1430. So this is how we look at trading Priceline and all different sides of the market, and that the put side of the market pays on Priceline, PCLN. Here's the highs on a daily chart, just so we can take a look. So I'm going to blow that up right here. This is the last part of that move. And on a daily level, Priceline is overbought. And we're going to make money on it by buying the put options short term. MMTs. Overbought Priceline, correction around the corner.